Hi, this is Mac with PriceActionTradingSystem.com. Today is Tuesday, February the 14th. Today is Valentine's Day, and hope that you've had a great trading day. And I hope if you have a special loved one that you took the time to at least call them and tell them you loved them today, or send them something nice, because I know that that always helps, makes your day brighter when you come home if you've taking care of your duties in that area. So anyway, let's get on to our chart lesson today. I apologize we didn't have one yesterday, but I had a situation that I had to be with a friend of mine, and I'm probably going to have to cut out of here a little early today as well because of that. So I'm going to go ahead and try to get this done early today. It's only about 2:30 my time, but this is well after generally, our rules say we don't trade after 2:30, and we really shouldn't. I don't even like to trade after lunch, but definitely, and cutting it off by 2 o'clock, and certainly no later, entering no new trades after 2:30, because sometimes there are some good moves late in the afternoon. But most of you already know my stance on that. I don't like trading late in the day, because if you make a mistake, or if something crazy happens, you don't have time to make it up. Where if you make a mistake in the morning, you can take a break and get away from it and come back and still have time to make up any mistakes and so forth. And you just can't do that in the afternoon, and then you got to quit on a negative note, and you quit on a loser, and maybe even a losing day, and it just carries into the next day. So for that reason, it's just not worth trading late in the day. But let's get on to today's lesson. The first couple of swings off the overnight, this is what I saw. You could have had this drawn like so. If you drew it right off that top of that swing, you still would have been in pretty much the same place, and it would have actually given you most of these bounces down here on this low side. But I had it drawn. Generally, I like to find where you come off this point here, where it touches the first couple of bars, and that could have been like right here, touching those two bars. But generally, it's that's what I saw right there. Then we had the break right here. We had actually two nice measured swings down to a new low, and then the prices reversed. And remember, a trend line break and a retest to a new low doesn't always mean you get a reversal. It just means you get a protracted correction that lasts generally at least an hour or so. And this one started just prior to 10 and ended just prior to 11, so that's a nice hour protracted, a little bit over an hour protracted move. Not much happening there, and you probably had a hard time picking up what was going on today, because it really wasn't a trend. This looked like a trend, and you could get a trend line, and it did follow. It was a trend, but it's short term. But what we really had, basically from the open right in here until about early afternoon, this is just a trading range. So you might have had difficulty seeing this. It was not really easy to see, but if you drew your lines across some of these highs and lows, you should have been able to find it. And especially when we reversed here and then reversed again here, um, that was a great clue that this was going to hold as a double top. This is a downtrending market. This looks like a double top. And anytime you get a double top or a double bottom and you get a chance to enter with the prior trend, that's what you want to do. And you can see as you go all the way back into yesterday, this is still kind of a trading range from yesterday. We did finally break lower and have kind of headed lower, but it looks like it's going to reverse and try to come back up in and test this area again. We've got a little bit of a trend line here. We had a break of it. We've only had one leg down, so we may get another leg down here that's equal to this, or we may come back up and close back in the trading range, because this really is just a trading range day. It did break out late in the afternoon. At this point, that's the way I would describe this day. But we spent the majority of the day. This is the open right in this area here, and we were still in this range as early as about 1 o'clock today, breaking out of it. So that's pretty much most of the day spent in this area. So I would describe this more of a trading range day. And generally, what will happen, you'll have a leg like this, and you'll go into a range, and then you'll eventually have another leg down of about equal movement. So we may get that, we may not. But let's talk about what we did have to trade prior to lunchtime into the early afternoon. And this was a great setup here, a double top during a pullback. And you can see there's a nice two-legged pullback. For the newbies, this may have been harder to see because it's kind of choppy, but you got one leg up right here, your little pullback, and then your second leg up right there that made a double top right here off of these top bars, kind of. Even if you'd have drawn this a little higher, you probably still should have seen this. Even if you'd have drawn this up in here, you still should have seen that. And anytime you get a double top with a trend, you want to be very interested in that trade. So that was a great chance to enter, especially, let me show you here. We had a first entry long, pullback, or actually we had a new high, pullback, first entry long. Then we stalled with this little inside bar, and prices broke above it first. So that was your second entry long, and then prices fell. So you could go short right below that bar. It was a great setup off a double top with a trap right there. And you can kind of see prices shot quickly down. They came back. This is a trading range here. So like always, when prices broke below these little matching lows right here, they pulled back and retested. So you could have entered again right here. I didn't mark that trade, but you could have entered again right there, especially when we retested that possible trend line and it held again. So, but this was your better entry, and you would have scalped out of that real quick. You probably wouldn't have held a runner if you moved your stop to break even, but you would have had a nice scalp, and you could have re-entered again. Right here again, prices broke higher first and then turned and went lower and closed down here on this very low. So you could have gone low below this bar because of the trap, or you could have waited on the bearish bar and gone short right there. And it did hesitate a minute, but nevertheless it broke on through. There's still room to scalp out before getting to this low, so that was a nice safe trade. And you could have ridden this all the way down to this double bottom and exited off this double bottom when it formed. And then we had our trend line break. There was another nice second entry short. Again, prices broke higher first and then reversed. So you could have gone short below this bar, but the better trade was to wait on a trend bar in our direction, which was this bar. So I went short right there. And then it was, again, probably no runners unless you gave them a little room. But you notice we had two legs down to a new low. And then prices reversed, and we had this hour-long correction. This was a nice failed break below a double bottom with a nice bullish type inside bar there, so you could have gone long right there. That was the safer trade, or you could have gone long right here. But let me show you the disadvantage by being more, sometimes being more aggressive is the better trade, and let me explain to you why right here. By being more aggressive, you were getting long well before we got to the EMA, because the EMA is almost, even if it's going to get through, it's still going to act as resistance. It's very rare it's going to rocket right through there. And you see what happened. It did. The prices congested right there and struggled and created a trap before they went higher. So by getting in down here lower, you're giving yourself room to get out before you run into this resistance. And another thing, you're also able to get in with a much smaller stop, because if you're putting your stop below the low of the swing low right here, even if it's 2 ticks, then you're getting into this trade for less than 2 points, versus if you enter here, it's almost 2 points just to get below here, and if you give it another tick or so, then you're over 2 points, and we don't ever want to, you know, it's very rare you want to give a trade more than 2 points when you're doing the scalp and run type technique, because you give too much of your profits back if you're wrong. And so you could have entered here, but not as good a trade. This was your better entry. And then you could have entered again right here when prices broke lower and reversed and then turned and broke out this high side. You could have gone long just above these three right here. And you can see it hesitated a minute, but it ended up taking on off, and there was enough room to do that and get out before getting to this high. And the odds were we were probably going to come back and test this former high up here, this double top. And I really thought we might even come back up here and test these highs, but it didn't happen. We formed, you know, right here where this double top. Any time there was a formal double top or double bottom, that's going to be an important area when we get to it again. And since we had this double top, that was a good place to be thinking exit, especially when we kind of rocketed through right there. You could have gone short right here because there was a trout. We broke above this bar, hit the double top turn, and closed on our lows. So you could have gone short right there, but that was a little risky at this point because we'd been in an uptrend for an hour. So it's better to wait for a second entry. And so here's your second entry short with a nice reversal bar going short right there below that bar. Was a good entry. And again, it was an easy scalp. You may or may not have survived with your runner, depending on whether you gave it to break even or break even plus one. But if you gave it break even, you definitely probably survived right here. And with the idea that our target was at least down here where to this area, maybe to this other low, and you can see we basically made a double bottom right there. And if you always move your lines like I teach to where the last close was, like this up here, there was your last close, so that would be there. This was your low of the day, that was your lowest closes, and you can see that's right where the reversal happened. And now that you got your line down here, that reversal makes more sense right there too. So you would have seen going long right there, or right there was a pretty good trade. And again, this one was mixed because it's similar to this trade back over here that we were talking about earlier. You could have gotten in right here, but because this broke through pretty quickly without bouncing, sometimes you do want to wait on a second entry. It would have been okay to go long here as long as you didn't tighten your stop, and you see if you'd had your stop right here, you would have been fine, and you gave yourself room to get out before getting up here. But that's a fairly bearish move coming down for a good bit before this reverse. So in this case, I would have really recommended waiting on, even though that's a nice bullish bar, I would have waited for the second entry right here to see if we got a higher low, and we did. So entering here was definitely a better trade this time, but you don't always know that. And sometimes you just have to take the risk and enter here and put your stop down here and give it a tick or so below that, and just be ready to reverse with it if it does break and reverse lower or whatever. And you can see, like I figured, we're going to end up closing right back in the middle of this range, it looks like. There's still 30 minutes in the day, so we could go lower, but that is a nice reversal move right there, and that's kind of what I figured would happen. My guess is we'll be testing this before the close, and may even come back and test this high here before the close. It's not unusual, but anyway, there was only one other. There really wasn't a good setup here. If you went short right below this big bullish or big bearish red bar, that was okay. That's not a bad trade, but it's not a great setup because we're already got this low here and prices are kind of working higher, and the odds are that prices are going to bounce off this low or break out and fail, and eventually that's what happened. But we did get a nice move down. So if you took this trade, it wasn't a bad trade, but it's taking an entry out of a bunch of congestion with all those overlapping bars and dojis is a very risky trade. But the fact that you had this nice real bearish bar right here gave it a little more merit. So if you took it, it wasn't a bad entry. It's just not a great entry. I like to mark the key entry points, which is the ones I mark. And there's always other trades during the day, depending on how aggressive you want to be or how much risk you want to take on. And that's a two-sided coin. By taking on more risk, if you don't know what you're doing and you're not great at reading the price action, you're going to take on more losers. However, the other side of the coin is by taking on more risk, a lot of times you get rewarded well for it, and that especially on the breakouts. Because if you caught this breakout down here and you entered around 42, well, you got to ride that all the way to 46. And that's assuming you exited at the formal double top, which is what I'll do a lot of times, and then look for an entry on the pullback, another entry. And so, like I said, it's a two-sided coin, and you always want to consider both sides. But by being more aggressive, a lot of times you can make, you get the better moves by being aggressive down here. That's a nice, quick move. Of course, it's late in the day, but if this would have happened over here in the middle of the day or early this morning, look at that quick move in just a few minutes, 38 to maybe 2 or 3 minutes. You've made yourself 5 points there by being aggressive on this failed break lower and this double bottom. And so a lot of times it pays to be aggressive. And by this time it was pretty obvious that we had a little bit of a trend line coming down through here. And I'll be honest with you, I really saw this trend line as being this. with the break right here, and then a couple of legs down, and then a two-legged reversal, and then one more test of that low, as you see that held, and then now we're working higher, and we're really headed to test this right here more than likely. And we'll probably get some kind of pullback here first, but it wouldn't surprise me if we go on up here and test this. The market seems to be really coming on right now. So that's what I was talking about. A lot of times by not trading after 2:30, you're going to miss some of this. But to me, what happens more times than not for most new traders is they're, this late in the day, market's been down pretty much all day. They're thinking short, and they get short in here, and this is what it does to them. And they end up losing a bunch of money, and there's no time to make it back. Now, if you get this right and you get on the right side, that's great. But it's takes a lot of nerve to go long down here, knowing that prices have been kind of trending down all day. Even though we've been in a trading range, the bias has been down all day. And except for this little hour stretch right here, the bias has been down all day. So, it takes a lot of nerve to go long right here. And but that's what you got to learn to do. You got to be able to learn to be almost a contrarian. Common sense says you should be looking for low, shorts, and that's what people are thinking. But when you get to a support area, see how many times prices have bounced down here? That's not a good sign to be going low and to be going short at a low like that, because the odds are we're overdue for some kind of correction. And you see what happened, and we're correcting, and I'm looking for a possible pullback to the EMA here, but we're so close to this, I wouldn't be surprised if we don't test it, especially this late in the day. They've got everybody on the wrong side. They're running stops all the way up. They're hitting these stops, and every time they hit a new batch of stops, it runs it a little higher, and that's what they love to do. They love to get everybody thinking short and then reverse the market, or get everybody thinking long and then reverse it to the downside. So again, like I said, some of your best trading, I always tell people that, common sense is your worst enemy when it comes to trading markets, especially the ES, because what you should be doing goes against good business decisions and good common sense. And I know that probably sounds strange to some of you, but it's really the way it is, because you need to be, when most people are thinking getting short, that's when you really need to be thinking, do I need to get long here? And when people are thinking getting long up here, you should be thinking, hey, this is where I need to be probably getting short. And that's hard to do, because the momentum has been up for this whole hour here, and suddenly you need to be going short. Well, that's hard to switch gears like that. And common sense tells you, I ought to be getting long right here. And so it's a difficult mental ping pong, and that's what makes trading so hard. There's lots of strategies that work, including price action. I do believe that price action is the best strategy when it comes to trading, but there's lots of strategies that work. But the real thing that makes trading so hard is the inner demons that you're always fighting in your own head, that's saying, I got to get in this trade. I'm letting it go without me. And just about the time you talk yourself into getting on with the trend, it's reversing, and then you're thinking, oh, I got to reverse, and then you find out that's only a temporary correction, and you were right the first time, and then you got to reverse again, and then suddenly in just a 15 or 20 minute period, you've chopped yourself to death, and you were right in the beginning. Your timing was off or something. And so you're just constantly fighting that mental battle, and it's something you've got to learn to deal with. That's going to be the hard part for you to make it, to become profitable as a trader, is to fight the mental demons. So keep that in mind. I'm going to wrap this up. We're into 20 minutes here. This is Mac with PriceActionTradingSystem.com. Hopefully you had a great trading day today, and if not, a better one tomorrow. See you next time.